Good afternoon. This is Dale Snyder with the Snyder Group of Keller Williams Realty here in Las Vegas. Today's topic of discussion is going to be short sales, foreclosures, bankruptcy, and how that impacts your ability to repurchase a property. We've been doing short sales for several years here in the Valley, and that's one of the greatest concerns that our clients have when they originally reach out to us. We brought Erik Wirtner with VanDyk Mortgage in today. He specializes in exactly what we're going to talk about today. So, Erik, thank you for coming by.
Thanks, Dale. I appreciate it. Thanks for the nice, warm introduction.
That's what I'm here for.
Well, you'd asked me to talk a little bit about the buying implications of somebody who's been through a short sale, a foreclosure, or a bankruptcy, which seems to be quite a bit of the trend here in the Las Vegas Valley these days, and in a lot of parts of the United States. Well, let's first take a look at the most common loan program, and probably the less restrictive of the two, which is an FHA 203B. And basically that's an FHA vanilla scoop of ice cream loan. It's a 3.5% down payment loan. It used to be specifically designed for first-time home buyers. Now anybody can basically get into the program as long as you're planning on occupying the property and don't already have an FHA loan now. So we'll start with the bankruptcy. Okay, now there's two types of bankruptcies, a Chapter 7 and a Chapter 13, and they're treated differently by underwriting. If you've done a Chapter 7, you have to be a minimum of 2 years removed from the discharge date, not the filing date, but the discharge date, in order to qualify for a new home. If it's a Chapter 13, you can be 1 year into the repayment schedule, and as long as you have trustee permission and a clean trustee payment history, you can then qualify for the purchase of a loan through FHA. Now we'll look at foreclosure. If you've had a foreclosure on your credit report, FHA requires that you wait a minimum of 3 years before they'll allow you to repurchase. They do grant some exceptions in extenuating circumstances, and extenuating circumstances FHA in this market does not consider to be job loss, because it is unfortunately very common in this economy. The last one is the short sale process. So to be eligible for a FHA loan through short sale, well, it's a little trickier. A lot of times people come into the short sale process and they've had to get some mortgage rates in order to even get their investors' attention or their bank's attention to go through the short sale process. But now a lot more of those servicers and those investors are allowing people to short sell without any lates. And if you short sell without any lates, you can buy via FHA the very next day. You're going to have to show that you were not trying to take advantage of market conditions and exiting an underwater property in order to just go out and buy another one. You do need to show that the property has some characteristics that are more advantageous to the property which you exited. Maybe is geographically closer to your work. Maybe also is in a better school district if you have children and you're looking to raise a family. Those are some of the compensating factors when leaving the existing home and buying a new one. Then there's the issue with the short sale, though, if you weren't current. And as long as you had no NOD filed and you didn't go over 120 days late, FHA, you can generally get in within a year. If it goes over 120 days, you're going to have to wait the standard foreclosure process, the standard foreclosure requirement, which is 3 years. Okay? So that's the difference on the short sale. It's how you finished or left it with your lender. If you were current, you're eligible right away. If you were seriously delinquent, you're going to have to wait 3 years. If you were somewhere in between, it's about a year.
Okay, that's great information to know, because I know a lot of our clients, they're missing many payments, and if they were aware of the fact that staying current or making partial payments would enable them to buy, based on what you just told me, I believe within 1 year, that might change their decision on staying current on the property.
Well, the other type of lending or loan situation you have out there is a conventional loan, which is much more restrictive than an FHA loan as far as its entry into the marketplace with some of those derogatory occurrences that we talked about. So we'll take a look at the implications of a conventional loan with regards to bankruptcy. So again, there's two types of bankruptcy, a Chapter 13 and a Chapter 7. And a Chapter 7 requires a minimum of 4 years from the time of discharge. A Chapter 13 is going to require 2 years from the date of discharge, which will generally be 4 to 5 years depending upon how long the Chapter 13 would be. Okay? And then a foreclosure, you're going to be looking at anywhere from 4 to 7 years. The loan to value is restricted on the foreclosure, so if you're at the 4-year anniversary, you can get into another home with 20% down. all right? And if you're at the 5-year, you can get in with 10% down, and after 7 years, you have full access to all the conventional loan programs. On a short sale situation, unfortunately, conventional treats short sales a lot like they do deed in lieu and foreclosures, and that they also restrict it on the same tier that I just spoke of as far as down payment and anniversary dates. So FHA is generally the way to go when you're looking to enter the market again after one of those occurrences.
Okay, understand. So I guess I'm a little bit, I mean, you're obviously the expert on this. I'm a little bit still unclear with the different bankruptcies, and because you covered a lot there, because obviously it's your expertise. So I don't know if you have anything in closing to say. Otherwise, I'm just going to suggest reaching out to Erik. He's obviously the expert, and he can explain this in more detail.
That's all I got for you, Dale, unless you have any questions. And if you guys have any questions, Dale will tell you how to contact us.
All right. Well, thanks, Erik. Once again, it's Dale Snyder with the Snyder Group at Keller Williams Realty. Our website is dalesnyder.net. You can find Erik's information under the Info tab. Go to the Preferred Vendor list, and you will be able to find Erik's information. Thanks for stopping by. I really appreciate the info.
I appreciate it. Lunch is on you.
Ha! Perfect.